Coming off a hot jobs report and yields are ripping globally. That's what's moving the market right now. And my name is Blake Morrow. You are listening to the Week Ahead video. We're going to talk all about this explosive move in yields, the big non-farm payroll beat, and all the events that are happening this next week that could really move the market. I'm glad you guys and gals are here, so we're going to get to it, and we're going to talk, really, we're just going to jump right into the jobs report. I mean, what a strong jobs report that we had today. If you saw the numbers came out at, we created 256,000 jobs. Way above expectations. And I know you're going to sit there and you're going to say, well, Blake, but by the time we get revisions, they're going to be revised lower. Yes, there were even some downside revisions here anyway, but the unemployment rate also jumped down or came down to 4.1%. This was another catalyst that continued to move the markets higher, or continued to move the dollar higher, and actually the market sank. If you saw what happened as soon as the data came out, you saw that the stock market, and let me go ahead and get myself, I'm going to put myself off of this video here. There you go. What you saw is the stock market came under pressure, and now we're kind of recovering because the fact of the matter is when you have a good jobs report and the stock market sells off, I mean, does that justify the market selling off when you continue to have a decent labor market? So the market is recovering right now, but the bigger move, in my opinion, or the one that's more important, is the move that we saw not only in the dollar, and you can see the dollar breaking out to new trend highs, but also the moves that you saw in yields. And that brings me to our title of this video is yields, yields, yields. Well, if you take a look at what's happening with the 10-year, yield, it is breaking out to the upside. We're trying to just break out to the upside. And look at the 30-year yield. 30-year yield is moving higher, breaking some resistance as well. But one of the big movers this week that has been a big driver of what's happening in the currency market has been the move in the 10-year gilt yield. And take a look at this breakout. That is a massive breakout, and that is what has the pound dollar basically on its knees and breaking down in a big way. Now, if you're looking at sterling, sterling has broken a lot of horizontal support, and you look a little bit longer term and you go down to this low over here on March of 2023 to these highs. And the reason why I mark up that level is because that is where the uptrend really started, because you had higher highs, higher lows. So we became in an uptrend from there versus previous spike low was a lower low. So since that was the last lower low before we started making higher lows, that's where we're going to mark the fib levels from. You can see we're coming up to some pretty key support. But the question is going to be for you guys going into this next week, will sterling be able to reverse course? There's a lot of things that are happening this next week. And in the US, we have CPI, we have producer prices. But if you're talking about the UK, in sterling, you've got a lot of data that's coming out this next week. Not only do we have CPI next week in the UK, but we also have GDP, we have retail sales. But what I would be looking for in order to see some sort of reversal in the pound sterling, or seeing this reverse, you want to see those UK yields really reverse. And right now, that doesn't seem like to be the case, because it seems like we're in breakout territory. But if you see, gilt yields back below 477, back around 475, that might reverse course of what we're seeing in the pound sterling. Like I said, the other big, in my opinion, some of the bigger news this next week, we got a couple other things. We have inflation data in the U.S. Obviously, we're going to be looking at unemployment claims and U.S. retail sales. But what we're going to be focused on is inflation. And inflation will matter this next week, especially as we've come off such a really good data this week. So let's look at the dollar index and just realize that the dollar index actually made a new trend high this week. And you can see we're still in that ascending channel. We made a new high. We broke above the resistance we were talking about last week, which was 109.50. We're above it right now at the time of filming. The thing about the dollar index, though, is it just completed an equal leg move. That's an AB equals CD. This is November, the November rally, and then the December rally. We just basically completed an ABCD equal leg move. So where the dollar index closes from here is going to be pretty important. What I'd be looking for going into this next week is if the dollar index continues to break into new highs and we break above today's highs, which was 109.96, that means that the dollar index is obviously continuing higher. Now, I was talking to Jim Welsh of Macrotides, and he believes that next week's inflation data is still going to come in and look relatively hot. So there's not going to be any reprieve from inflation. So that could be the catalyst that continues to drive the dollar higher, or it could be the fact that Donald Trump, stands, strong with his threats on tariffs, and that could keep the dollar strong in the very near term. So keep your eye on the dollar index. And one of the things about the dollar index that I do want to talk about is notice that the sell-off that we saw earlier this week, that was actually on a Washington Post article, which Donald Trump ended up denying. That's what caused the move to channel support and the reversal. So that channel support is going to be extremely, extremely important on any type of dip in the dollar. And as long as we're above that channel support, we have to assume that the dollar is still going to continue higher at this stage in the game. All right, now I do want to talk about the other important thing that's happening this next week, in my opinion. So if you're going through your calendar, is just take a look at what's happening in Australia, because we do have Australian employment, which will be Thursday morning, but it's actually Wednesday night if you live in the US, or Thursday night while you're sleeping if you live in Europe. But the Australian dollar did hit a brand new fresh trend low. Now, we've been talking a lot about the Aussie dollar, and I'm going to talk about it in the review section because if you don't know this, I talk about my 3 top trade setups of the week, and I review the ones from last week. So we will be talking about the Aussie dollar from a review standpoint. But what I want you guys to really notice here is the Aussie dollar continues to hold this descending channel. And even after that news story, we actually hit the channel top and reversed. The next day, we hit the channel top again, or it's actually in Asia when we hit that top again and then we reversed. So it just shows you how important this Australian channel is. So if we have employment data, that it could be the catalyst that drives the Aussie dollar higher, or perhaps maybe there's some news about tariffs and maybe about what's happening in China that could influence the market. It'd have to be less tariffs, I guess the way that I could phrase it. Anyway, that would be the catalyst that has to drive the Aussie higher. But right now, the Aussie is breaking some pretty critical levels of support. You can see there's a lot of air underneath the Aussie, but I want to talk a little bit longer term about the Aussie. Obviously, relative strength is very oversold, or you can look on the weekly charts. We're just reaching oversold. We're very divergent on daily relative strength. But go back to the weekly chart. If you take this spike low post-COVID, here, let me remove myself here. That was the post-COVID lockdown lows to the highs that we saw back in 2021. The 78% retracement comes in around 60.50. And my assumption is that is going to be a very critical level of support should we see that this next week. So I want you guys to write that number down, 60.50. 0.60, it's actually 0.064 or 6042, but 60.50, roughly around that area. I think that's going to be really critical support should we see that next week. Now, there are obviously other events that are happening this next week, and I'm going to take you through a few other currencies really quick. Before we discuss, we bring in Nick from Trading Analytix. He's going to talk about the big 3 indexes. He's also going to talk about a couple of individual stocks as well. And then I'm going to talk about crude oil, gold, and some other markets too. But I do want to cover some other currencies that I think are worthy of your attention. One of them being the dollar Canadian. So the dollar Canadian, if you look at what's happened this week with the dollar CAD, you'll notice that the dollar CAD has been, we're just in this solid uptrend. Matter of fact, what I want to do with the dollar Canadian, I'm going to do a little bit of work with you guys here. I'm going to delete this. We don't need that. We don't need this. We don't need that. I'm just going to delete some of the stuff. I'm cleaning up the charts for us a little bit here. We're past this 161% extension, but I'm going to leave it there for just a minute. What I do want to draw is I want to draw you guys this channel, which I think is prominent here in the loonie. Actually, we're going to do it like this. And we're going to draw it something like this. And then I'm going to do the lower end of it. There we go. We're gonna make this more visible so you guys can kind of see how I'm staring at the lower trend line right now, which will look something like that. There we go. That's it. Okay, so we're in this ascending channel, obviously, with the dollar CAD. Now, a lot of people feel that, because Trudeau is going to step down, that actually gave the Canadian a little bit of strength early on in the week, but this has mostly been a dollar move. The Canadian jobs report came out. If you guys didn't see the Canadian jobs report, that was a blowout number itself. The market was looking for 25,000 jobs. Canada created 91,000 jobs. That's a huge number out of Canada. Were there some, maybe some revisions are going to come back around? Sure, possible. But, right now, that has stopped the dollar Canadian from hitting new highs because the Canadian dollar was as strong as it was today following the Canadian jobs report. Also, if you guys haven't seen crude oil has been really strong as well. So what I would be focused on right at this moment is I'd be looking at the dollar Canadian if we broke back through channel support. In the event you break through channel support in the dollar CAD, that is going to be, in my opinion, an indication that maybe the market is ready to roll over, but not until then. Until then, until then, we could see between now and the time we get inauguration, if President Trump ends up being very hard on Canada and tariffs, that could be the catalyst that drives us even higher towards 146. Now, I'm going to share with you guys what I would say is a target, which will be, and I'm going to draw it for you right now. It's 145.85, I believe. So you can see right through here. Let's zoom on in. Right there, that high to that low. The 161% extension is 145. Well, it marks up here as 145.90, but you guys can see that area as we approach 146 is going to be very, very important resistance should there be a bullish breakout. And in my opinion, I think the risk is that we do see a bullish breakout on the dollar Canadian near term. So if we reach that 146 level and it stalls, you know why it's going to stall there. So that's a currency pair I did want to talk about. And I also want to talk a little bit about the dollar yen. The dollar yen, even though we had strong data, you can see how the dollar yen has actually reversed a little bit. Now, a lot of that has to do with an article that came out overnight, about how the BOJ might start looking at and maybe even recalibrating their inflation, and that could, be more leaning towards a more hawkish and looking to hike rates. Bank of Japan. If that is truly the case, what I'm going to be looking for, and I'm going to just give you this support for the dollar CAD, or excuse me, not dollar CAD, the dollar yen. We were just talking about the dollar CAD, is going to be this support right here at the 156 level. If 156 is broken, that means that we are now making lower lows. And that also means that we've broken this resistance, which was the breakout point. So again, I'm going to be looking at support at 156 as being very important in the days and weeks ahead. And since we're talking about a week ahead video, maybe that's going to make more sense for you. Now, at this point in time, before I get into other markets like gold, I'm going to talk about crude oil. I'm going to talk about what's happening in copper. I am going to bring in Nick from Trading Analytix. But before I even do that, I want to mention, if you guys have not seen it, if you want to learn how to get instant funding for the markets, we have the trader funding program. We've always done the one-step assessment where you can actually take one step and pass the assessment and then get access to larger amounts of capital. But we also have instant funding now, and that is as of this week. So this is for non-US traders. So I want to make sure that I make that clear. This is for non-US traders. If you're a US trader, you are just limited to the one-step assessment that you've had for the last 3 years. But if you're a non-US trader, you can talk about, or you can look at what it'd be like to get instant funding. Now, a lot of traders look at this and they go, okay, well, you know, it would be $400 to access a $10,000 trading account. Then you have your maximum daily drawdown of 5%, and you're like, oh, and my daily trailing drawdown is 5%. Those are my parameters that I got to trade within. That's great, but there's more to it than that, because the reason why you'd want to have this particular type of funding account where you have instant type of leverage is if you see a trend develop and you want to add to a profitable trade, which is the MO for most traders when you're in a position. If the position is working for you and you want to add a little bit more leverage, this allows you to do that. And what also happens is you get access to the Forex Analytics community, the Forex Analytics platform, and inside of our community while you are in the funding program. So the instant funding or the one-step assessment, you can be in the trades room. You can see where people are buying and selling and what they're buying and selling, myself included. You can be in the general chat room. You can talk about different, and this community is great because you can talk about all the different, things that might be moving the market that, put call spread. Oh, what is the bullish or bearish trend of this, that, and the other thing. Being in a community like this is beneficial, especially when you're going through an assessment type of situation, or if you're just going to get more funding. So make sure you guys check out the Trader Funding Program. There now are 2 options for a lot of traders out there. You have your one-step assessment where you pass an assessment. Once you do that, you get access to larger amounts of capital. Or you can have instant funding if you are a non-US citizen. You can get instant funding, but you also get access to Forex Analytics, the community, the platform. And if you're a new Trader Funding Program customer, you also get a one-on-one coaching session with me. I'll tell you how I pass assessments. I'll talk to you about maybe some different ideas that might help you when you're trying to pass an assessment, or maybe some different ideas when you're trading if you just bypass that and you go into the instant funding program. So make sure you check out the Trader Funding Program. You can check it out right on the Forex Analytics website. So make sure you do that. All right, I'm going to bring in Nick from Trading Analytics. He's going to talk a little bit about the equity markets.
Hello everybody, my name is Nick Groves. Blake, thanks so much for having me on. What a morning we're having today with that NFP report that came in so strong. You're seeing articles out there, Dow Jones tumbles after bumper NFP jobs report and some other speculation. US NFP report all but guarantees the Fed rate cut pause until at least June. This market certainly seems to be, or this morning seemed to have been freaked out that we're not going to get as many cuts as they wanted. I would say be careful what you wish for, and we'll have to have that rate conversation at a later date. But really significant price action that we saw today. The lows of 58.30 were swept this morning, but now you can see we're getting back above. And after that wall of worry of breaking these lows, thinking we might be headed towards 57, 5600, I think the risk is, do we pop from here? And in the event we do, where could we start really pressing? Well, I'd be looking in the event we get back above 59.21 for the S&P to potentially squeeze higher, because false breakdowns can lead to breakouts. However, on the flip side, if we're going to continue lower, I would be looking somewhere near the 57.25 level. That is a 38.2 retracement and also comes in near the previous lows of October. Moving along to the NASDAQ, a very similar situation, a false breakdown, which can potentially lead to a breakout. And that's what I'm trying to get at here. We saw a lot of price action movement down here. People likely trying to get short. And the issue is if we push higher, I think we could see a squeeze. We're also seeing some RSI divergence. So we have to be careful there. But the Dow is performing a bit worse, still sitting on the lows. It's not gotten back above its breakdown of 42,485. I will point out, though, we are sitting at the 38.2 retracement of this larger range. So if it can hold, maybe a similar story in the Dow. But looking at the Dow and things like the Russell, that's sitting in a bear flag that was triggered this morning, it does point for more equity weakness. Well, let's talk a few stocks in the Mag 7. So let's go ahead and talk about Meta. And kind of the reason why I'm wondering if we're at risk of a breakout in the stocks is Meta, it's positive today. It's up 1.85%. You did see it shoot lower this morning, kind of tagged and back tested the breakout that it saw earlier this week. And the question is, will it hold? And it certainly looks strong. So we'll have to keep our eye on that. And then also Apple. Apple's been interesting. We pointed out how there is an evening star formation here in Apple the other week. And we've now drifted lower. But I want to point out that we have come up to some trendline support, and we are sitting and flirting near the 38.2, and also a previous breakout level that we saw back in the early December. So there's a lot going on. If you're looking for more information and some updates on those Mag 7 charts, check us out on Trading Analytix, and I'll go ahead and pass it on back to Blake. I hope you all have a great weekend, and I will see you all next week. Cheers.
Well, thanks, Nick, for the update on the big three indices. I do actually still want to talk about the indices. And you know what? I'm going to end up talking about Apple as well, since I have to review. So I have to review the trade setup from last week. But let's talk a little bit about the S&P. And because we talked about how important last week the S&P was. Oh, I thought I clicked on it. We talked about how important this 30 level was, which is the 618 retracement. And you'll notice how the S&P is really respecting it. We hit it, we bounced, and the fact of the matter is that remains critical support. So if I could just grab this little trend line right here and just suggest that you guys just keep an eye on these lows. As long as we hold above these lows, then the bulls are still in charge. Now, also keep in mind when you're dealing with the S&P, we've had a 618 retracement. We're basically holding, but we're also in an ascending channel. Yes, we've come out of an ascending wedge. Yes, we're still in an ascending channel. And matter of fact, because of those two different dynamics, if you look at the bias chart that we do this with privately with the Forex analytics community, I go through all of these different instruments, and so does myself and Steve Valgaris. We talk about all these different markets that are moving. You'll notice that the S&P, it's in range. Why is it in range? Well, it's in range because it's conflicted between coming out of an ascending wedge, which is bearish, but also it's in an ascending channel, which is bullish. So as a result, we're in a range-bound environment. Now, should we start breaking below 5,800, I believe that would be a bearish event for the S&P. But again, the proof is in the pudding. So let the S&P break below there first before making an assumption that the market is ready to turn. A couple other things that I want to talk about is I want to talk about how important this support of Bitcoin has been and how it is now creating a head and shoulder pattern. I know a lot of people have been talking about it, so I'm not going to be the first one that you've heard this from, but I do need to explain that this is really critical support now for Bitcoin. Because if you look at Bitcoin like this, however you want to look at it, head and shoulder pattern, this tells you that basically the 91,000 level is huge support. And if that breaks, the measured move of a Bitcoin break of let's just call it 90,000. If it breaks 90,000, technically it should take us right back to a 75,000, which is the big breakout point longer term, right? And one of the things that I always say about Bitcoin, which I'm sure many of you would agree with is Bitcoin is probably one of the best technical trading assets right now, and a lot of cryptos are too. So if you don't understand like the macro backdrop behind some of the technical reasons why you should be buying Ethereum or Solana or whatever you're trading, just knowing that the technical setups are really, really quite respectable when you're dealing with crypto. That's a big takeaway from right now. So keep an eye on that head and shoulder pattern. I think it's really important. Also, I do want to talk about copper. Copper's gotten a lot of attention as we've gotten a really big rally this week, and we stopped actually at the 200 DMA. And also triangle resistance or wedge resistance, whatever you want to look at. A lot of traders have been talking about what's been happening between the LME and the CME and the differences between the two, and because of tariffs. So there's reasons why copper has been rallying, but the fact of the matter is, if we get above the 200 DMA in copper, this would probably be pretty damn bullish from a price point of view. So just keep your eye on copper, because I think it is worth noting. And I am going to talk about crude oil and the rally that crude oil has, because I want to talk about and review the trade setups from last week. So let's just go ahead and get into it. Now, before I get into the trade setups of this next week, I do want to mention this. With Forex Analytics, we offer holiday specials. You probably see, and you're like, oh, the Christmas holiday specials. Well, it's a holiday New Year's special. We offer these prices only a couple of times a year. So this is the time to take advantage of it, because we will be taking down these specials within the next few days. The reason why we do that is, and the reason why we extend out until mid-month in January, is because we know a lot of traders are on vacation, they're on holidays, they're coming back, they're in meetings, and we've given people time to take advantage of it. And a lot of you have been very thankful over the last 8 years we've been doing this to take advantage of these prices. We, up until December, the end of December when we offered this, we've never offered 40% off on a semi-annual subscription, ever. So take advantage of it, that it's here. Or you can buy 1 month, get 1 month free. All right, so take advantage of these prices. Highly suggest that you do, and get in the chat room. If you don't know how to get to the chat room, you just hit this little button right here that says go to chat room right next to your avatar. You click on that little button, and that takes you right into the chat room where you're going to be able to talk to me and all the other traders that are having conversations through here and posting charts and whatnot. And hey, that's the dollar index you were just talking about. Okay. So at this point, we're going to review the trade setups of last week. So trade setup number 1. Now this is active, and guys, I was on holiday this week. I was on a family reunion trip. I said buy the euro at 102 or buy the euro above 103.50 for a breakout. Well, you could have done both. If you bought the euro above 103.50, we traded all the way to 104.40. So it was a 90 pip gain. We sat there literally for about 24 hours before slipping back below there. If today, following the jobs report, the low was 102.13. And we got really close. Some of you may have bought the euro down there. And if you did, you're sitting in 20, 30 pips in profit. So I think trade setup number 1 worked fabulously. But you had to be quick. And actually, by the time I woke up on the West Coast of the United States, and that had already happened, I missed a lot of the move because it happened while I was sleeping anyway. But I'm sure those of you that were trading there, you took advantage of it. So congrats to you. All right, trade setup number 2. Long the Aussie dollar back above 62.75. Now, we did break above 62.75. We got to 62, we got to 63 cents. But also last week, I talked about how important this channel resistance was. Now, if you were like me and I got up a little late and already rejected that channel resistance, you know, maybe you waited. But you'll notice that the channel resistance is just really, really important to be broken. And we couldn't overcome it. So we could say that that one didn't work, but it kind of depends when you got in front of your computer, because if you're like, oh, we basically respected that level, you know, give or take a few pips based on news, well then, you know, you probably didn't get in the trade. I'm going to say that one didn't work, but I'm sure a lot of you didn't fall for that. I'm sure a lot of you were just, you know, traded around that level and knew that that was key resistance. I even tweeted about it this week once I saw it. All right, number 3. So one worked, one didn't. Number 3, crude oil. I said buy crude on a dip to $73 and look for a move back to the 200 DMA. Well, let's talk about crude oil, because that worked about as well as you could imagine. We basically rallied through this resistance. We came down, tested $73, and I think, well, let's see, we went as low as 72.84, and we were looking for a move to the 200 DMA and above. And boy, did that work fabulously. So if you took that trade, boom, right? So 2 worked, 1 didn't, and then we have one more that I talked about from the last week, and that was selling Apple near 250. Well, I do want to talk a little bit about Apple, because I did end up buying some puts and I closed them today. So if you, I bought puts in the middle of the week while I was traveling, and if you see what had happened with Apple, we were looking for a move to 250. It didn't quite make it to 250. I sold it at like 247. I bought some puts. I closed them out this morning when it was at 236, basically, you know, below where we're at right now. And I did pretty well with it. Now, some of you might have been waiting for 250. We didn't quite make it. So you can count that one as a win. You can count it as, you know, yes, maybe no. I think, well, I traded it. So I did well with it. Hopefully you guys did too. So that was the review of the 4 setups that we had last week. And guess what? This week, I'm going to give you 4. I'm going to give you 3 plus a bonus. So the first one, Euro. Now, I'm not saying, you know, get long above 103.50. I'm going to say if we see 102 or around 102, I think you want to be on the long side. Even if it pushes a little bit below it, I think being long around 102, around the long-term 618 retracement, long-term 618 retracement is the trade to be in, at least for a counter trend move. Now, remember, it is counter trend, so you want to be, you know, diligent about managing it. Probably don't want to take a big position because it's counter trend, but that's the level that I'm looking at in the euro. The next one, trade number 2, the dollar Canadian. Should the dollar Canadian see the 161% extension, which is 145.90, 87, somewhere around there, I am looking to sell the dollar Canadian on a rally to the 161% extension, because overall, I believe that having the Trudeau administration removed is going to be a net Canadian positive, and I believe traders are going to be trying to buy Canadian dollars on any rally into new highs in the dollar CAD. So that's the way I'd want to trade that if we see it. Trade number 3, how I want to take advantage of this, the euro sterling, is I do want to buy dips. So in this instance, I'm gonna share with you guys the euro sterling on how I'm viewing it. Let's remove this. And by the way, if you want this analysis already, you know, beforehand, you just go to Forex Analytics, go look at the euro sterling, and you're going to see exactly what my analysis is right here. Okay. All right. So let me draw it out for you though, since not everybody here is a Forex Analytics subscriber. So this is a descending wedge in the euro sterling. We broke out of the descending wedge. We hit the 161% extension. If you guys didn't see the 161% extension, I'll give it to you. There you go. We hit the 161% extension. Now I'm looking to buy dips, any dip that you see back down here to 83.30. So if we see a dip like that, I'm looking to be on the long side on the euro sterling. So that's how I want to take advantage of sterling weakness, is through the euro sterling on a dip. All right. That was trade number 3. Trade setup number 4. This is the bonus. I do want to be short Amazon. Now, do I want to be short Amazon here? Here, let me add it to here so we can look at it next week. Do I want to be short Amazon here? And the answer to that question is nope. I want to actually be short Amazon on any move to the wedge resistance, which is about 225. So by the time we get back up here, it'll be about 225. And I'm looking to be on the short side. But you can see how this is a wedge. You got support right here, lower highs. So I'm going to be looking to establish a short just shy of that resistance, in the days ahead, and hopefully sometime into this next week. So guys and gals, I hope you enjoyed this week ahead video. If you like it and you think it's going to be beneficial to you, and it's crucial for you getting ready for each trading week, make sure you give me a thumbs up. Subscribe to the channel down below. It's free to subscribe. It's free to give a thumbs up. And if you have any comments, or if there's something that I might have missed that you think is really important, that could really influence the markets this next week, let us know in the comments below, because I try to read every comment that comes through. And I want to thank you all for spending your time with me. I very much appreciate it. And good luck this next week. Remember, it's all about yields. Yields, yields, yields. And that is what's driving the boat right now. All right, guys and gals, my name is Blake Morrow with Forex Analytics. You've been listening to The Week Ahead. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.